Welcome to another episode of Valia Money Talks, brought to you by Blue and White Finance. I'm excited to have a real expert on the show today, somebody who really understands the navigating the minefield that is living in Israel while being a U.S. citizen. Larry Stern, welcome to the show. Why don't you start by telling us a bit about
Thank you very
yourself
much for
and
having
your
me,
work?
Aaron. My name is Larry Stern. I'm a U.S. CPA with almost 30 years of international tax experience, both in the U.S. and here in Israel. The last 15 years since I made Aliyah here in Israel. Um, I specialize with individuals with certain complex tax transactions, such as stock options, expatriation, relocations, with the goal of trying to minimize the tax obligations of our clients, both from a U.S. and Israeli perspective.
Great. Yeah, we all want to minimize our tax, so that's certainly something important. What I want to try to discuss today, and what we're really going to focus on, is this discussion that comes around expatriation,
Sure.
renouncing U.S. citizenship. And you hear it a lot. People are considering it. People think about it. Why, when I come to Israel, do I have to now navigate two very complex tax systems? Why not just navigate one? Why can't I just be a normal Israeli? And that's we hear that a lot, and that's understandable. So why don't you start by telling me a bit about kind of your experience with clients, how different reasons that come up for why clients might be strongly considering renouncing their U.S. citizenship. Obviously, we're not going to get into any of the ideological tenets here, or the emotional side of whether I want two passports or one passport. What we're trying to focus on here today is kind of the financial aspects.
So
So tell me a bit about that.
you're exactly right in terms of the emotional aspect. It's a main component to a lot of people's decisions. So, like you said, when we talk about here, we're gonna discuss more the financial slash tax implications of doing so, and there are many factors that people take into account when they consider renouncing their U.S. citizenship. A U.S. citizen, once they move to Israel, is going, as you indicated, going to be subject to both Israeli tax regimes, both tax regimes. Maybe not on certain income for the first 10 years after they make Aliyah, when the income is from abroad, but in general, on a long-term basis, the taxpayer is going to be subject to the worst situation between Israel and the U.S. From a tax perspective. Things that may be tax exempt in Israel would be taxable in America. Things that would be not taxable in America may be taxed in Israel. For example, tax exempt interest wouldn't give the same benefits for an Israeli resident that would be for a U.S. resident. On the Israeli side, things like keren ishtamut, which may be a taxable withdrawal for U.S. purposes, is typically non-taxable on the Israeli side. Removing severance from a person's pension, a portion of it could be tax-free in Israel, but taxable in the U.S. So remaining subject to the U.S. tax system and the potential for tax in Israel may actually be a significant reason why people would want to consider giving up their citizenship. Although the U.S. is very, very adamant to not allow people to give up their citizenship just for tax reasons. And they actually asked that question as part of the expatriation process. So while tax may have an underlying factor, things like the need to continue to file tax returns every year, the administrative nature, the limitations on investments that a U.S. citizen may have, it puts a person in a more challenging financial tax planning situation. So that's usually the background why people would consider it. It's usually a lot easier for people if they actually have a third citizenship as well. Many people have EU citizenships or Australian or otherwise UK, in which case some of the other reasons to keep U.S. citizenship, such as entering the U.S. on freely, wouldn't apply to that person.
Got it. All right, Larry. So you've convinced me. I'm considering giving up my U.S. citizenship right now. Let's start kind of trying to understand some of the financial considerations around what potential complications might exist. What is a covered expatriate? What you touched on that term. What does that mean? How do I know if
So a
I'm
covered
a covered
expatriate
expatriate?
is someone that is subject to the rules of expatriation under Section 877A. The definition of a covered expatriate, let's talk about the general definition first, and there are exceptions to it. But the general definition is anyone that has either more than $2 million of assets, net assets, meaning assets less liabilities, um, anyone
Okay.
who is not tax compliant for the last 5 years. Okay. Um, those are typically, or if they have a tax liability to the U.S. Greater than, I think it's currently approximately $180,000 per year in tax liability over the last 5 years each year. So any of those people can qualify as a covered expatriate, and the rules related to expatriation and ongoing potential tax obligations, filing, etc., um, would apply to those people.
So if I fall into that status of a covered expatriate, what kind of considerations do I have as far as exit tax and what do I need to
So
really
anyone
consider
that's a
before I take
covered
this next step?
expatriate that meets any of those criteria would be subject to an exit tax on their unrealized gains based on the value on date of expatriation, which is the day of giving up your citizenship. The expatriate would be subject to tax on unrealized capital gains, um, although there is an exemption amount of approximately $750,000 currently, whereby an individual would not have to pay the actual exit tax. But on any unrealized gains in excess of 750,000, there would be an exit tax assessed at the ordinary tax rates, such as capital gains rates if it's a capital gains asset. If it's a ordinary asset like a pension, it would be at ordinary tax rates. If, so plus the Obamacare tax. All of these things would be calculated at the same rates as it would be if they had an actual taxable event.
So that 750K, that's the total capital gain exemption or the
Capital
total
gain
asset
exemption.
value exemption?
So many individuals who
Got it. So
might be considered covered expatriates may not end up having to pay exit tax at the end of the day. Being a covered expatriate also has other implications. There is also what's known as a transfer tax, so that any individual who is a covered expatriate and transfers assets to another U.S. citizen or green card holder, even if it's their children or spouse, the U.S. citizen. Actually, let's take the spouse out of there for the moment, but at least as far as children, grandchildren, or other recipients of gifts or inheritances, those recipients would be subject to a transfer tax similar to estate tax of 40% on the receipt of those assets from a covered expatriate. So having the status of a covered expatriate is a challenging one. And one of the tax planning opportunities that we look at in situations like this is how do we get a person to not be considered a covered expatriate? Let's say they have $2.5 million of assets. What can we do to bring their asset value below the $2 million threshold, assuming they don't meet the other reasons for being a covered expatriate?
So that's one of the really areas of focus is trying to avoid that label because that can really stick with you for some time. How does that work in terms of if you are declared a covered expatriate, are you able to break away from that status once you've already
To
renounced your
break away
citizenship?
from it afterward, the answer is no. However, there are some exceptions to who would be considered a covered expatriate. Anyone that gives up their citizenship, again, meeting the criteria of being tax compliant for the last 5 years, and so on. Anyone who is between the age of 18 and 18 and a half and gives up their citizenship would regardless of their asset value, would not be considered a covered expatriate. In addition, anyone that has dual citizenship from birth, living in the second country of their citizenship, and have not been resident in the U.S. for 10 out of the most recent 15 years from expatriation, would also have an exemption from being considered a covered expatriate. So while a person may
that can
have
be
$2
helpful for
million
people that are
of
born in
assets,
Israel.
there's a category of people that are called accident, or known as accidental Americans, whereby pure
Quite a lot of them,
accident, they have American citizenship. Let's say their parents were studying in the States at the time of their birth. So technically they're American citizens because they were born in America, but their parents aren't. They live 98% of their life in Israel. They're kind of accidentally Americans. And as such, if, let's say, take that scenario I just described, if they're living in Israel, didn't live in the States for 10 out of the last 15 years, and have dual citizenship from birth, even if they had $100 million of assets, they would not be considered a covered expatriate because they live in Israel and had citizenship from birth and have been tax compliant for the last 5 years.
Got it. That's very important information for a lot of people who are born here in Israel. One other detail I'd like to clarify a bit. Somebody who's making Aliyah and considering renouncing, but their entire asset base, let's say 95% of their asset base, is US-based retirement assets, 401ks, IRAs, different things like that. Would that be any different in terms of calculating their net worth?
It wouldn't change their net worth.
It
wouldn't change their net worth. And if you're talking about an actual pension, I'm not talking about, you have the funds themselves that tell you the exact amount that's in the fund at the time of expatriation. But if somebody has a pension, you would need to do calculations to understand what the present value of the future benefits of the pensions are in order to identify the value of the individual. Where having U.S. assets becomes challenging for a person that's considering giving up their expatriation is when it comes to estate tax issues. So inheritance tax is a major complication for individuals that are considering giving up their citizenship. I'll just touch upon that for a minute just to explain the implications. Generally, a U.S. citizen under current law has a little over $13 million of an exemption per individual of worldwide assets to exempt from U.S. estate tax. A non-U.S. person, so a non-citizen, non-green card holder living in America, would be subject to U.S. estate tax, even though they're not resident in America and otherwise, if they own U.S. assets. Okay, a U.S. asset does not necessarily only mean real estate. It can be stock in U.S. companies, and it doesn't have to be held in America. So even if one works for IBM or Google or Facebook and is part of their stock program, they would have exposure to U.S. estate tax. That's the one that most non-Americans don't know about. And when a person expatriates, they become a non-American for estate tax purposes. The exemption for such an individual is only $60,000. So if a person has $1 million sitting in retirement funds in America and they pass away after expatriating without having disposed of those assets, they're going to be subject to U.S. estate tax on almost the entire value of their U.S. assets, which comes as a shock to a lot of people. So this is kind of one of the reasons why a person may consider not giving up their citizenship if they have significant U.S. assets. On the other hand, there's planning to be done to minimize that exposure. I see people that wait to give up their citizenship until later in life, after they've withdrawn their assets from these retirement accounts, and then they give up their citizenship. So it doesn't have to be a decision for today or tomorrow. It can completely be a decision that one works toward over the next decade, over the next 30 years, or whatever the case may be, to minimize their future exposure to U.S. taxation and limit and avoid the limits on investments.
Yeah, I think it's such an important point that you're touching on that. Many people think that only Americans can get wrapped up in the American tax net. American assets that exist are a very big part of many people's investments. And you can easily get wrapped up as a non-American in the American tax net. And the last thing you want to do is get rid of your citizenship, planning in order to avoid the U.S. tax net, only to make, compound the issue and make that issue worse. So I'm glad you're touching on that. Let's say somebody's able to plan carefully and they're able to avoid this, this being considered a covered expatriate, and they are considering moving forward. What other costs do they need to factor in, when it comes to actually renouncing that citizenship and going through with the process?
The government assesses a fee, currently at $2,350, for the right to give up your citizenship. So that's one aspect. There is talk of that fee reverting back to a lower amount, closer to the end of this year, of $400 or $450. I haven't seen anything official on it at the moment, but there's definitely a discussion about that. Other fees that a person might incur is, let's say they own private stock or they own real estate. In order to get the value, you have to hire someone to actually perform a valuation of the assets. And that valuation would then be used for purposes of identifying a person's net total assets. So there may be costs associated with getting the information necessary in order to go through the process and do the tax planning associated with expatriation.
So touch on that a little bit further. If you're renouncing your citizenship, you actually need to make a full assessment of all your assets to the U.S. government, or is that something you just need to do for your own benefit?
It actually needs to be reported to the U.S. government as part of the expatriation process, not the actual physical interview that you go through for expatriation, but the year in which expatriation occurs. There's a form called an 8854 that needs to be both attached to the tax return as well as filed separately with the IRS, that provides a balance sheet, your assets less your liabilities, to come up with your net assets, detailed, to be able to prove whether the person meets the $2 million threshold or not. Okay, all that information is reported on this 8854. So in order to properly fill out the form when filing your final tax return, which is not necessarily your final tax return, but your final resident tax return, then you need to have that information available in detail. When people think, okay, well, to what extent do I need to get valuations? Look, am I going to say that you need to get a valuation of your sofa? No, but you'll probably estimate what your household goods are, your household furniture and things like that. But higher asset values such as jewelry and cars and real estate would likely need an assessment of their value. And you want to have that documentation in case the tax authorities ever come back and question it.
Right. And just to emphasize, we're talking about worldwide assets, not
correct.
only U.S.-based assets for
it's
this.
Worldwide assets for U.S. citizens. Perfect. And that's also why they have the larger exemption, because they have to report their worldwide assets.
So just to drill down on that. Let's say I do manage to expatriate. I get an appointment at the embassy. I go through that process. I'm no longer a U.S. citizen. Um, when am I done filing? And I know we talked about that first year, that requirement to fill out that form. When am I done filing? When can I start buying PFIX and open up a Kubot Gimelashka and go do all kinds of different things that U.S. citizens have been told not to do?
Theoretically, you can
Okay.
already invest in PFIX the day after. It typically takes a few months to get the paperwork from from the immigration authorities in the U.S. indicating that your expatriation has been processed, and it would be processed
Okay.
typically based on the date of the interview. You'll come out of that interview with a cut passport in the corner saying that it's no longer valid, but it's probably a good idea just to at least wait to see the final documents before starting to invest. Um, in case the date listed on the form doesn't match the date of the interview for some unexpected reason. But assuming that everything goes according to plan and it is the date of the actual interview, um, then your status changes the next day. You file the tax return the next year like you would normally file an annual tax return, but it would be what's known as a dual status return, meaning that you are both a resident and a non-resident for the year. You would file the non-resident form 1040 with the 1040 NR, excuse me, with a 1040 statement and attach the 8854 to the filings. Other filings also would stop at that point, such as the FBAR, where you'd only need to report bank balances up until you are no longer a U.S. citizen resident. Okay? So if you maintain assets after the time period that are subject to U.S. tax, then you'll continue to need to file, although you would only file just like a regular Israeli would. So just like an Israeli who invests in real estate in America needs to file an annual tax return, you as an expatriate would have those same obligations. Where it might be slightly different is that if you are subject to exit tax for U.S. purposes, you have the option to defer the U.S. exit tax until the date of sale, of the actual sale of the asset. And if that's the case, you'll continue to need to file something, possibly an 8854, possibly a 1040 NR, to indicate and pay tax on the exit tax based on the date of sale. So there may be continued obligations, but if you are not considered a covered expatriate, then your obligations will be no different than a regular Israeli who invests in U.S. assets or doesn't invest in U.S. assets.
This has been really great, just understanding kind of all the different planning that exists, understanding, you know, about estate tax, not getting caught up in, depending on what assets you hold, understanding being a covered expatriate and how to avoid being a covered expatriate, and, planning that needs to go in to understand whether you are a covered expatriate. This has just been really great, and really appreciate you helping us break down this important issue. I'm going to have some links under this video where people can get in touch. Why don't you tell us more about how people can reach out and learn more about your work and get your planning services to consider these different
Sure.
topics that you
We can be
consult on.
reached via our website, www.aboulafia, ABOULAF, as in Frank, ia.co.il. You can send an email to info@aboulafia.co.il, and we'd be happy to assist. It's important just to note that the process of giving up citizenship doesn't happen from one day to the next. It's a process. Even getting the appointments at the embassy, there were periods where, especially with Corona, it took years to get an appointment. So if you're concerned about receiving, inheriting, earning amounts that are going to take you above the covered expatriate threshold, then you really need to look at where and when you would potentially want to give up your citizenship and start that process as early as possible, because there are potential unexpected bumps along the way. So that's one of the services that we provide to our clients. We provide them accompaniment throughout the entire process, including helping to calculate the potential asset value, working with lawyers and valuators, appraisers to come to an appropriate valuation, and work provide guidance about what to expect in the interviews with the authorities, which offices may be worthwhile approaching, because sometimes there are backlogs in specific offices to know what the time frame that's necessary. So we provide a holistic service from beginning to end of the process to accompany someone through that big change in their life.
Yeah. No, I think it's so important that you're highlighting this, that this is really a process of careful planning. It's not something that you just want to throw down your passport in frustration because you run into one of these tax minefields and then you're done. You're not a U.S. citizen. This requires careful planning, and you need to make sure you're checking all these financial boxes as well as all the other considerations that exist. Larry, again, thank you so much for coming on the show. This is really, really helpful, really informative. Thanks to everybody for listening, and I hope this was valuable for you. Be sure to check out a lot more content on thewhitefinance.com.
Thank you for having
we'll see
me,
you next time.
Good luck with everyone that's considering this.